What's up, guys? Welcome back to the channel. Thanks for tuning in. Today we're going to talk about a sexy DEXy. Guys, this is going to be pretty fire sauce. DEX we're going to be talking about today is SifChain. What is SifChain? Well, in this video, guys, we're going to explain all that to you and more. It's similar to like Uniswap. No, it's not like, well, yeah, you can consider it like a Thorchain, but Thorchain is for the short tail assets. I guess you can call it a short tail because the long tail is what SifChain is looking to attack. So the short tail, quote unquote, like Bitcoin, Ethereum, Monero, Litecoin, like the major assets that have larger market caps would be considered like the short tail because, well, this is how you draw out the charts. They look like this, and they consider all the assets down here like the long tail. Or it might be a reverse. It might go this way. But basically what it means is like, if you have like a chart and 100% is like the very top of it, and all of this, like this chart area obtains all of the coins, or it contains all of them in it, the short tail, or aka the major assets like Bitcoin, Ethereum, will take up the most part of that up curve. The long tail is like the rest of the million other altcoins that there are. And that's what SifChain is looking to capitalize on. You can theorize it like Uniswap. But this one is different, guys. It's a omni-chain decentralized exchange, and they got some pretty intense formulas and features inside their protocol. But first off, guys, if you guys are new to the channel, make sure you guys do 3 things for me. Like, subscribe, bell button, leave a comment in that description below saying you subscribed. You will automatically get thrown into that drawing to earn $100 in free BTC. So guys, if you want some free BTC while you're learning and earning, guys, you know what to do. So let's go and get into SifChain, break down a couple things. This is on the main chain. You guys can read over it and look at it. But I'm going to go over a couple of important things. This is on the main website. And we're going to show you guys how to use SifChain as well. They got some serious liquidity mining incentives, or at least they did. So they have some pretty good incentives still. But a couple of things you need to know is, first, it's an omni-chain DEX. So it's not just on one chain. They can also take blockchains such as Bitcoin, Binance Chain, Polkadot, EOS, Cosmos, you name it. Really interesting birth, this project. They airdropped a bunch of their tokens to people. I actually got one of the airdrops. If you guys were on the channel earlier, you would have gotten into the airdrop as well. You just had to do a couple quick things. It was nothing crazy. But check out their roadmap, guys. First, token sale, block launch, da-da-da-da. That's awesome. But look, the multi-chain support and liquidity pools. This is fire sauce. Then you got Peggy for Ethereum, which is like the Ethereum assets getting on there, and they're doing a good job on it. And ability to stake and delegate to earn rewards. So guys, they're having liquidity mining coming. But now, Q2 2021, IBC protocol, the Omni Bridge, and the SIF DAO. That is fire sauce, dude. Wait, there's more. Come on. Buy 2, get 4 free. You got limit orders. You got additional peg zones. And you got margin trading. I already told you guys about margin trading. Yes, I don't like leverage trading. I don't like trading on margin. But people still don't listen to me. But a lot of people are going to use it. And it makes a lot of money. And it brings a lot of volume. But check out these partners and investors. You guys know that one called Alameda Research, or NGC Ventures, or Mechanism Capital, or Master Ventures? Yeah, big names, guys. As always, guys, this is not financial advice. I'm not a financial advisor. Sure, this is a sexy DEXy. It's cool. It's the first omni-chain decentralized exchange. But guys, I'm not a financial advisor. I'm wrong 1000% of the time. I'm just explaining to you guys how this technology works. You guys make your own decisions. You guys do what you want to do. Just explaining simple concepts in DeFi to break it down and demystify DeFi. It's got way more TPS than Ethereum. So you can consider this like the Solana, but it's cross-chain. So Solana is great, but it's not cross-chain, guys. SifChain is looking to be the Solana Uniswap, but for every chain. I mean, dude, it's like unimaginable. And well, actually, you can imagine it with Thorchain, but they are differentiated from Thorchain because Thorchain is getting the major assets. SifChain is basically being your Uniswap of all DEXs, guys. An omni-chain DEX. This is, in my opinion, this is being slept on. Yeah, the market cap is like nothing right now. Literally, the market cap is 17 million. So we're going to show you guys a couple of features on the SifChain DEX, and we're going to explain it. And again, I'm going to also add this in. This is what differentiates SifChain from other protocols. So this is what differentiates SifChain from other protocols. First off is the problem with Uniswap or other AMMs is they have a simple X times Y equals K. Why is that a problem? Well, if you're providing liquidity 50-50, then you have an issue of impermanent loss. So say you provide liquidity and the TVL that you have locked in there, aka all the tokens that you put in there, is worth maybe, let's say you're a whale. We'll just call you a millionaire. You got 1 million locked in TVL. But now a big whale, like we're talking like I don't know, a killer whale shark thing. I don't know. He comes over, he's got $10 million, and he comes in to buy all the ETH inside your AMM or little liquidity pool. Well, you're going to get wrecked. Like, it's going to be complete and utter wreckage. Because say you have Ethereum and USDC, he's going to buy all of your Ethereum. Now you're just going to have a huge bag of USDC. There's nothing wrong with it, but you have no more Ethereum. And now Ethereum skyrockets in price. Well, you just sold it all to that whale because that's just how liquidity works. It's 50-50 AMM. Now SifChain changes that, guy. They allow you to put in selective liquidity. So instead of doing 50-50, you can choose to do 90-10. You can do 80-20. That's if you're like bullish on an asset. So say, for example, you want to provide liquidity to get those rewards, but you're super bullish on SifChain. Or say you're super bullish on Ethereum and you're like, I don't want to provide liquidity 50-50 because I want to keep my big bag of ETH, but I want to earn some passive income. So provide 90-10 Ethereum, USDC, or whatever other protocol that you want. And your impermanent loss is going to be much less. Yes, you still would have impermanent loss. So say, for example, the other side of the pool just literally gets wrecked and goes to zero. Well, that AMM will buy it up eventually, but it won't be as noticeable until you get it'll be way different. There's different curves and different models that you guys can see, but a 50-50 is going to be a lot more noticeable than a 90-10 to the asset that you're wanting. So just to understand that. And we're going to show you in the protocol so you guys can see it as well. And also another feature that I really like about SifChain is that they have an internal fee model. So when you're selecting or swapping from different tokens, we're just going to say we're going to swap from USDT to some Rowan. That's the token itself. You guys can see here you have a liquidity provider fee, you have the price impact, and the minimum received. So the price impact is basically like the slippage that you're going to have. The liquidity provider fee is the fee that is going to liquidity providers. Now what SifChain does different is they have an internal fee model. So like on Uniswap, it's just you make the swap and that's it, boom, done. You get the fee, you say bye-bye, and you move on to the next. However, with SifChain, they add another symbol into the formula. That way there is a customization for the liquidity provider fee. So why is this important? Well, say there's an arbitrager who has a ton of money and is just out there just wrecking pools because that's what he does best. Well, in this scenario, you're going to have an internal fee. So now there's going to be a profit sharing. So those whales, like the killer whales, like wrecking everyone, he's going to be sharing some of his tokens that he gets as a bonus because he's going to be paying in these swap fees, dude. So guys, that's massive right there. I mean, you're going to be basically taking part in a whale scenario. And why is this important? Well, if other liquidity providers know this, they're going to come over to SifChain and provide liquidity because they know they'll have more protection. A lot of people don't like impermanent loss, especially when they understand it. Now, with this internal fee model, this will allow more and more liquidity providers to say, hey, I want to go over there. I know at first you were thinking, well, if the whales got to give a share of their profits, they're going to go away. Well, now it's different. Now you have more LP, more liquidity coming over, and that's contagious because you get better prices because there's more liquidity, and as more liquidity comes and better prices come, more liquidity providers come, more traders come, more action comes. When more traders come, more fees come. When more fees come, more rewards come for the liquidity providers. So now liquidity providers come. Now there's more liquidity. More traders come. Now more traders, more fees. Now comes more. You guys get the ongoing cycle. So that's what SifChain is looking to do. So instead of going to like a Uniswap, or on Solana going to the Serum DEX, or on Polygon going to Matic, instead you're just going to have one omni-chain DEX. So it's on all the different chains. And let's go ahead and show you guys a little bit of action in this sucker. And okay, I know you guys are asking, okay, why would I buy this Rowan token? Well, we're going to show you guys now. You have three options. First is you can stake it, aka validate. This is how you get rewards. You get staking / validating rewards. Second is every transaction you make on here is going to be paid in the Rowan token. So you need the Rowan token to do that. Third, you have providing liquidity. So in order to provide liquidity, I did USDT Rowan right now. I'm going to remove the liquidity just so you guys can show this feature, so I can show you how this feature works. You can choose a certain amount you want to remove, but in order to provide liquidity to earn rewards, you must, like I repeat, you must have the Rowan token. So we're going to just do 100%. You can say all Rowan, you can say equal, all external asset. So you can do like, I want 100% of this or 100% of this. I'm just going to go 100% of Rowan. Actually, you know what? I'll make it, we'll just do it just a little bit less, just so I can get some USDT, because I'm going to provide liquidity on the other side at a ridiculous ratio. Like I'm going to do like mostly Rowan, because I'm super bullish on Rowan, and I would just prefer to do that instead. So are you sure your withdrawal will not, okay, I understand, whatever, unless you've reached a full maturity. I understand, because I didn't make the liquidity mining incentive. Just make sure you read that, guys, and you understand it. So now we're going to make the transaction fee. I'm going to do low. I'm just going to do a low gas fee because I'm a cheapo, and I'm removing this now and getting my Rowan tokens. So now I'm getting my Rowan tokens and my CUSDT. That literally took a matter of 3 seconds. Now you're asking yourself, okay, that's great and all, but why would I use SifChain? I know you just told me all these great things, but who cares? Well, first, let me finish up with the protocol so you guys can see this, but let me give you an example of this. Have you guys ever played the game Snake? Well, Snake, when you put it on the phone or put it on any device, it's super easy to code and put in. Especially if you're a dev, it's like, oh yeah, dude, I know how to do that. That's like the back of my hand. However, when you want to create things more complicated like this, you need to have your own chain or customize it. Why do you think FTX went with Solana? Because they've been looking and looking and looking, and they didn't just go with Ethereum. They found Solana because it works great, and it works great with their system, and it fits perfectly with them. Yes, it is a bit centralized, but they had a protocol that did that. However, check this out. Look, SifChain is its own chain, and it has its own DApp built on the chain. Why is this a game changer? Well, now the actual chain is customized and built around the DApp, and the DApp is customized and built around the chain. It's a win-win situation, guys. So now both of these literally interact with each other and coordinate with each other and make each other better. That is a game changer, guys. It's a win-win situation for everyone. And they even have an option with dynamic rewards. So they have liquidity mining incentives. Let me just show you guys the pool stats so you guys can see what I'm talking about. But with these pool stats over here, they customize the rewards based on staking rewards and validating rewards. So if there are more validators, well, the more validators there are, the lower rewards that are going to be spread out to them. However, if there is more staking, like more people staking, the rewards will be lower over there. So they initially split it up 50-50. But as more and more people go to say, let's say staking, then they're going to decrease the rewards on staking because the liquidity mining, they want to incentivize that. Because guys, remember, it's a win-win situation. So if you have everyone validating transactions and no one's providing liquidity, well, those validators aren't going to be validating anything because no traders are going to go to a protocol with no liquidity. And it's the opposite way. If there's no validators validating transactions and everyone's providing liquidity, Well, what are you validating, or what are you providing liquidity for if no one can validate any of the transactions? Now you guys see the dilemma. Now you guys understand what I'm talking about. So now we're going to go ahead and provide liquidity. Just withdrew my liquidity so you guys can see it, but now we're going to add liquidity again. So I'm just going to say I'm going to add the maximum amount of Rowan, and I'm just going to say USDT because, yeah, I can. I'll do the maximum amount of Rowan in USDT. You guys see this? Pool equally. Nah, forget that junk. I am not doing this pool equally. I'm putting the maximum amount in Rowan. And I'm saying, forget this trash. I don't want no USDT. I just want to do all Rowan, and then I'll do the rest of my USDT. So check this out. Look, now I can literally do, I'm providing liquidity at like 99% Rowan because I'm super bullish on Rowan. I only want to do Rowan. I don't want to do USDT. I don't care about the stablecoin in this pool. I'm bullish on Rowan in this scenario. So now what it's saying is I'm pooling it together. And yes, basically you can get 6 Rowan per CUSDT based on those token prices. So I'm going to go ahead and add liquidity now. So there is something important to keep in mind when you are adding liquidity on this side. When you're pooling these tokens together, an important number you want to take into consideration is the share of the pool. Sometimes when you do the pool equally, it will give you more of a percentage. And if you do less, sometimes it will get you less because, well, if there's more Rowan tokens in the pool and there's less USDT in this scenario in the pool, they're incentivizing more people to add more USDT. Because if you understand how it works, if there's more Rowan in the pool and less USDT, technically it's saying more USDT will buy you more Rowan because it's a 50-50, just kind of putting it into ratio. So we're going to go ahead and add liquidity with this position, and we're going to say, okay, here's the amount we're depositing and what we're going to deposit into here. So we're going to confirm the supply, and we're going to pay the transaction fee. It's actually way faster than this. My computer is just super slow right now because I'm recording on a screen, and we're going to accept the transaction. So we're going to put the transaction through, and it's going to go through. And it typically takes about 3 seconds, even with a slow computer. And you can always manage this. You can see your net gain, your net loss, your pool share, your total pooled Rowan, and the total pooled CUSDT. So, like for example, this is how much is in the pool compared to the Rowan, and obviously you just have to crunch the numbers to see exactly how much they are in dollar value. But right now my pool share is 0.0034. If you ever want to see how many rewards you guys are getting, this is for validating. These are the rewards that you get for validating, and these are the rewards that you will get for liquidity mining. You can always check out the full information to see what it is. You can also go right over to the SifChain DEX and look at these numbers as well. These are important numbers to understand, guys. This pool depth is the total amount that's in the pool. The 24-hour volume is the amount of trades on there. Typically what you want to see is this number higher than this one. If it's usually not going to be higher than it because it's just the 24-hour volume. So in this scenario, what you want to see, the least difference in the price. So for example, going into this pool, you're going to get no rewards. But they do have the total APY liquidity mining bonus. But if you didn't get into this early, this does not pertain to you. So you're only going to be looking at the pool APYs, which are in this section right here, and they average it out for you. Guys, these change every 24 hours. This is just what it was the last 24 hours. Now I'm going to show you guys another cool feature of the Rowan chain, or I guess you can say SifChain, that is pretty fire sauce. So if you guys go to the main chain, you can actually export and you can import different tokens into here because you guys are now connected on both MetaMask and your Kepler wallet. So you're on 2 different ecosystems, and eventually they're going to have leverage trading soon. Me personally, I don't recommend leverage trading, but no matter how much I don't recommend it, I know a lot of people use it. And when a lot of people use it, well, that means there's going to be a lot of liquidity over here. And how do you provide liquidity over here? You guys need Rowan. And now you guys are like, okay, that's great and all. Well, I don't care about providing liquidity. I just want to trade. Well, in order to trade, you need some Rowan tokens. So that's something to keep in mind as well. If you ever want to export your assets, all you got to do is hit export. You hit the maximum amount and you pick the address that you want it to go to. And it'll automatically do that for you. And then it has the transaction fee down at the bottom, just so you guys can see that right here. We'll just do max, See, transaction fee, that's what it is. It's not in Ethereum. It's actually paid in Rowan for this scenario. Now, if you go back and you ever want to get tokens into here, since it's connected to my Ethereum wallet, all I got to do is hit external tokens, and I can say, hey, I want to import some ETH into here, into my SifChain address, and I hit max, and then I say import. It'll automatically say, okay, you got 50 block confirmations. It'll import all this to here, and I'll hit confirm import, and it will say, all right, here's your gas fee in order to do this. You got to pay about 20 bucks in order to do it, but I'm not going to do this right now, especially right now. Gas fees are pretty high. Well, not crazy high, but they're high. So that's how you can get your funds onto SifChain. Now you guys are like, well, why would I want to get my funds onto SifChain? Well, when you guys get your funds onto SifChain, you can actually just swap. It's really easy. You can swap for any tokens that you want. You can say, hey, you swap for Rowan, 1inch, Aave, Camp, Balancer, Band, Bancor, Bond. You can buy whatever you want, and the gas fees are super low. What's even fire sauce is you can get some runes, some sand tokens. You can get synthetics on here. I mean, dude, this is like what the pants. Why would you not want to use SifChain? And now when you get these tokens on here, you can easily just say, all right, I'm done. Game's over. I want my tokens back. You can say export, and you can send it straight to your Ethereum address, guys. That's a game changer. This is just Ethereum and SifChain. Now they're going to be adding more and more chains. That's why I'm so bullish on SifChain. Like I explained to you earlier, this one is a little bit different from Thorchain, and this is also how it differentiates itself. So with Thorchain, yes, it does do all the native assets, and yeah, dude, that is so fire sauce. But as you guys can see, they already had 2 exploits, and it's very complicated. And when they're doing native assets, they have to have a node onto each network. So they got to have a node on Thorchain, they got to have a node on Litecoin, a node on Bitcoin, a node on Ethereum. They got to have a node on you name it. Just leave a blank. Rowan, on the other hand, just has its own chain in-house because it's literally its own chain and its own DEX built on it. And in order to get your assets onto here, all the nodes are directly on SifChain. Yes, it is a bit more centralized. You are not trading the native assets. So now the bridges are basically bridged directly with SifChain, and SifChain is dealing with the bridges. That's a little bit different than an Ethereum to like a Binance bridge or an Ethereum to a Matic bridge. Why is that different? Well, because you don't control the admin keys. Matic or Binance would control those admin keys. Well, now you're asking yourself, well, who cares? It's safe with them. Let me give you an example why that's concerning when you have a third-party intermediary for the bridges. Well, say, for example, you are on Ethereum and you have a bridge that's going to Phantom. And when you go on Phantom, you want to use something like SushiSwap. Well, the problem with that, say you have USDC and someone just gets a wild hair up their buns on that bridge and it's just like, nah, bro, shut it down. We're done. They shut down the bridge. Now that USDC, where that bridge was on there, it doesn't lose peg, but you can't transfer your assets back over. It's done. It's over. Well, SushiSwap's still running, but it's basically roasted with USDC. It's toasted. It's not going to trade the same price. I mean, I'm sure you've seen different tokens. Like, let me give you a token, for example. This one's not an amazing example, but this is just somewhat of an example. The token is called Cody. Now, Cody is trading on different exchanges, but there's something odd. There's one exchange that it trades on that is not normal. Well, their bridge isn't active. On KuCoin, it trades for basically 12 cents. It was actually a lot higher when the token was a higher price, but you can see it trades for 13 cents on other exchanges. So there's a big price difference. Now you're like, why is that? Well, the problem is on KuCoin, they're stuck as an ERC20, so you cannot withdraw them on Cody mainnet. So it's like, oh, well, why can't I just use the bridge? Well, the bridge was having some errors, so they were able to work it out eventually. But that's just a concept that you guys need to understand, is like, if these bridges close down, well, your tokens are basically locked up over there. That's why I always tell people not to throw all your eggs in one basket. Yes, Polygon is fun, but do not leave the majority of your wealth there, guys. It's a centralized network. There's like 5 or 6 people who have all of the keys. Like, if they all went and coordinated together, they can theoretically shut down the bridge and all your tokens are going to be roasted on Matic. So that's just something to keep in mind. But SifChain comes into play and takes a different scenario at it. This DEX is literally specifically run on SifChain, and SifChain is specifically run for this DEX. So it's just like together and commingled. It's one of those things like if it was to shut down, it would shut down the whole entire DEX and it would shut down the whole chain. But again, it's decentralized because you have different nodes running it. Yes, it is a delegated proof of stake, but it's on the Cosmos chain. So now you have different people and different delegators validating different transactions on the blockchain. So it's its own little blockchain built on Cosmos, but yet it's able to take in many different blockchains, guys. It is a omni chain. Guys, it is massive. That is a game changer. It's basically like Uniswap on roids. No joke. Anyways, guys, highly recommend you guys take a look at Rowan. Take a look at it. It's really easy to do. You guys saw how quick the transactions were. The transactions are dirt cheap. I mean, we're talking pennies, like 3 cents. And it's built on Cosmos, guys. You can get all different kinds. You can get all kinds of different coins on here. You can get Mana, Ocean, Origin. Rally token, fuel. You can get SHIB, sand, synthetics, sushi. You name it, man. All the goodies that you can get on Uniswap, you can get here. Anyways, if you guys enjoyed the video, make sure you guys do 3 things for me. I really appreciate it. And it helps out with the YouTube algorithms. Is a like, subscribe, bell button, and leave a comment in that description below saying you subscribe. You will automatically get thrown into that drawing to earn $100 in free BTC. And guys, if you want to become a part of the Digi Squad, there's a link in the Telegram chat below. You can go ahead and ping us and say, hey, bro, what up? What you in? What you doing? We'll be more than happy to help you. Or you can even come there and say, I sent my tokens to the wrong chain. I need help. Well, we'll help you out, guys. Usually it's just user error in that scenario. But feel free to DM us, contact us on Telegram. Do not go with the Telegram comments. That is trash. I'm never going to contact you on the comments and say, here's my phone number. Give me a call. No, it's in the description. Read the description. Just go from there. Trust me. Proverbs chapter 20 verses 17. No, we already did this one. 18. Plans are established by seeking advice. So if you wage war, obtain guidance. Amen to that, brother, because war is a big thing. Dogs, got to say thanks to the patrons. Sean Bott, Da Man, Tariq Lou, TL King, JP, PJ, Bernito, Taco Nacho. Dogs, thanks for watching. Alright guys, if you want to catch me on TikTok, I do daily wisdom one-liners and let you guys see the pets and behind the scenes junk. So here it is. Scan it. Check it out. Bomb. Alright, so next off, guys, if you guys want to support the channel and get paid to do it, you guys can check out Celsius. Celsius is fire, dude. So what's so cool about Celsius is, guys, first off, you can get $40 in free BTC using my referral link in the description below. Just deposit $100. Add in the code BTC50. You will also get an additional $50 if you deposit $400, guys. It's free BTC. Next is Voyager, guys. I also got a referral link in the description below. Instead of just only getting $25, you'll get $25 and some free VGX tokens, guys. Next is BlockFi. BlockFi is part of the quadruple threat. Go ahead and make a deposit. Use this referral link in the description below. You get $100. Depending on how much you deposit, you can get all the way up to, guess how much? $250. Alright, so what the pants is Celsius and BlockFi for? Well, you can use both of those as like your bank. They get some pretty nice juicy yields. And Voyager is more so like trading, and it gets some juicy yields as well. And the last one to try is Crypto.com, guys. You can trade some like smaller altcoins, and you guys will get $25 in CRO once you guys get the Visa card. Why do I like the Visa card? Well, you can sell crypto and buy some junk with it. So I can buy a sandwich with my crypto. I don't use BTC, but I'll use like stable coins and junk. So anyways, if you guys want to support the channel, that's the quadruple threat. Thanks for tuning in, guys. You'll get paid to do it.